Hello and welcome to another update video about Natgas. Yeah, Natgas, natural gas futures, continues to grind its way sideways within what I consider a diagonal price channel. So from an Elliott wave point of view, we have an ending diagonal down there. That's at least my perspective. And we should still see another low in my opinion. But at least there is nothing that the market has done that would explain that, well, something different might be playing out. So I'm still looking for potentially another low here on this chart in what would be wave 5 of 5 to the downside. We have still a structure, and this is the zoomed out view, where a B wave topped in August 22, and then a wave 1 down, wave 2 up, wave 3 down. You can see clearly 5 waves in wave 3. Can just show you that's what we want to see in a third wave. 1, 2, 3, 4, 5. The problem with Natgas is there are so many different Natgas charts, okay, and that is just something to keep in mind. That is what makes Elliott wave, let's say, less predictive on a chart like this. But you can use it for risk management, and we can still track it or use it to track structures. There are so many Natgas charts, and you've got the monthly rollover charts, you've got the monthly futures charts, you've got here this sort of continuous contract chart, and there are the spot charts. It is a bit of a mess. I found that specifically true for Natgas. It just is the case, right? So you can also look at other, Elliott wave analysts tracking Natgas. They all use other charts. It's like a bit ridiculous. There isn't really a right or wrong there. So it's just something to be aware of. Luckily now the continuous contract chart is pretty much aligned with the monthly charts or the normal futures charts that we find on TradingView. That was at some point last year not the case. It was completely, I don't know, something happened there. So we have here this wave 1, wave 2, wave 3, then a wave 4 corrective rally that was, okay? And this corrective rally reached basically here not even the 50% fib level, but the 38.2. Well, that's fine for a fourth wave actually. We don't want the fourth wave to reach the 50% necessarily. This is typically like the ideal resistance area for a fourth wave between the 38.2 fib level and the 50% fib level. It got rejected there. Makes me, confirms for me that this was a fourth wave rally. This was at the time, by the way, also the expectation. If you remember, throughout last year, it was a patience test. We were watching for one more low. It then at some point became messy because the continuous contract chart got so different from the monthly chart. But anyway, the idea was to get one more low. There was no confirmation of a low in place at all there, anywhere. This move up became quite complex. And then we've seen one more low. This was clearly corrective price action. Clearly. I mean, you can always be wrong about this, but this was so much like a wave 4 overlapping corrective structure, probably turned into a WXY pattern. But this was so clearly not directly bullish. Of course, anything is possible, but there was nothing to tell me this was actually bullish. Yeah. So you have your WXY here, and I think at the time I counted it as an ABC with a C wave and ending diagonal, but it became super complex. And whenever you have something like that, it sometimes just sort of breaks without fulfilling the entire pattern. But it already reached, as you just saw, the standard resistance area. And then we've seen this move down. Here formed the wave 1 down, the wave 2 up, now the wave 3 of 5. We could now be in the wave 4 of 5. Okay, and this is sort of where we are right now. And if we go to the 4-hour chart, you see so far, again, this looks so corrective. I'm tracking here this as an ABC structure where the A wave was clearly a 3-wave move. Then we had a B wave down. And I think that's the count that makes most sense at the moment. At least clearly nothing clearly bullish. And if this really is putting in a C wave, then it's already struggling. Okay, it's already struggling, that weakness. You can see that actually. There are a few ways how this could be counted. It hasn't taken out this wave too low. So first indication that a top is already in place would be a break below this wave too low at $1.69. That would be a little bit earlier than expected, but then again, the trend is down still, right? We haven't seen When can we say the trend is up? Well, either if we break above resistance, which we haven't, so or if we see a first impulse to the upside, like a 5-wave move. But you can clearly see that all these rallies here have been 3-wave movements. Like the A wave is a 3-wave move. I don't know what this is. It's also a corrective. But yeah, I mean, it looks like the 3rd wave. I mean, it could be that the C wave is an ending diagonal. Okay, so A, B, C, the C wave as an ending diagonal. That's definitely one possibility. And then we would be dealing here with let's see, could be an A, B, C in wave 3. That's a very constructed count, of course. It's also possible that the wave 2 is still unfolding. Then we have a flat structure. But yeah, when it starts to morph, it's already showing weakness. And at the moment, I would tentatively count that as an ending diagonal in wave C. But I can also tell you already that it's looking very weak. So it's pretty much in line with my idea. I mean, it doesn't necessarily need to fill in all these waves. It could just turn into, I don't know, a WXY structure. But the bottom line is the 100% extension level of this A wave points to $2.11. So at the moment, until we take out the wave 2 low, and specifically the previous B wave low at 159, I think it's reasonable to expect, at least watch for the $2.11 level to be reached. But yeah, I mean, the sooner it goes down and the more it hurries up, the better, because then we can put that last low in, which could hit sort of the, yeah, let's say the low to mid $1 range, right? It depends. I mean, at the moment, I can't really give you a key target there because we haven't got a top in place for wave 4. But if I just use the top of the A wave, then we can look for the 38.2 and the 61.8 extension levels as next downside targets. And it would point towards $1.43 and $1.16 as key levels to watch. What we can also do is take the length just of wave 1 and go to that top. I mean, it's very temporary now because we haven't got a top in place for wave 4. So these are 3 levels to watch for potential targets: $1.43, $1.22, and $1.16. That's my update about Natgas. Hope you enjoyed the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye bye.